the Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
You are listening to the financialsurvivalnetwork.com. I'm Kerry Lutz on 1230 WBZT. You're probably familiar with Ned Schmidt. He's the publisher of the Value View Gold Report.com. He also publishes the Agri-Food ValueView.com, and he's a real commodities pro. He's got decades of experience. You can learn a lot from him. I know that every time I speak with him, I do. Ned, welcome back to the Financial Survival Network.
Oh, great to be here today. It's been a while since we talked.
Been too long. So gold looks like it put in its low. They keep trying to knock it down, trying to test those lows, but they're hard-pressed, aren't they?
Yes. Gold has put in a big base since the June low. I mean, we're 4 months into the low, into this trading range, this base. And that is a big formation for moving higher. It means that the weak hands are gone. And the complacency in the investment community is extremely high. The street is still talking about the day that the debt deal is done, that they're going to buy stocks and sell gold. They have not changed from this pessimistic view they got. And we start with this massive base that's being put in, and then we look at what's potential out for the next couple of years. Well, for the next 3 years, gold almost has a lock on because of what's going on in Washington, D.C. I mean, clearly, there will be nothing done on the U.S. deficit meaningful till 2016 when Obama's out of office. So we've got 3 years of still runaway spending and a deficit that works in gold's favor. I mean, clearly Washington is the best friend gold ever had.
Yeah, that's for sure.
To add that what the damage they're doing, whatever deficit solution the clowns come up with, is that it's damaged our image. You know, the Chinese have been talking for several years that they own too much dollar-denominated debt. And they've been piecemeal in small bunches, adding a little gold to their reserves, some euro debt they've bought. But all of a sudden, the rhetoric in China has moved to a higher volume. And last week, there was a piece in from the editorial from the news agency of the Chinese government, which was the strongest statement I've ever seen by the Chinese government, that they own too much dollar debt. And what we're going to see is China and other governments, they're not going to sell their government debt, but they're going to stop buying it. And they're going to buy gold, and they're going to buy euro-denominated debt. And that doesn't mean the dollar craters necessarily, but it means it's on a long, steep slide that we've got at least a couple of years where the dollar is going to gradually depreciate, and that's good for gold.
And what about silver?
Silver, I'm more optimistic in silver than I've been probably since 2010. It's one of the things that gold bugs can be, right phrases, let's say proud of, is for the first time we're mainstream. Any poll you look at, it's 55 to 60% of the U.S. voters think we've got a debt problem. And silver is attractive to new investors that look at the price and say, okay, I can buy silver for $22 an ounce. I can buy a whole bunch of those, but I can't buy many at $1,200 an ounce. So I think that we're going to see a very strong response in silver in the year ahead, because it is the preference of the individual investor.
Yeah, for sure, because like you said, it's affordable. It's the poor man's gold, as it's been said. Let me just cut that. And
Sorry about that.
don't worry about it. You okay now?
Yes.
Okay. So let me just state that again. Yeah, silver is obviously the poor man's gold. Nothing original on my part. Many have been saying that for years. And you can buy, with a few $100s, you can buy a few ounces, 8-10 ounces of gold, of silver. And with a few $100s, you can't buy very much gold at all. So for the common man, it makes a lot of sense to accumulate at least a little bit of silver, especially if you've got any sense of the impending debt debacle that's coming down the pike.
And today, they can, not only can they buy it physically, but the ETFs are well established. These are not scary items to people anymore. And so it's even easier than picking up the phone. They can buy it with a click of a mouse. And with gold and silver moving in this base, I mean, the exit from this base is going to be to the upside. Anybody looking for a breakdown out of this base, it just needs to go back and read some books on technical analysis. When it exits this base, that's when we'll start drawing the public into the silver and gold markets. And so, I don't know that it's going to happen tomorrow afternoon, but I know that it's going to start sometime within the next 4 to 6 months.
So 4 to 6 months is the time frame that you see this whole thing coming about.
Yes.
And it doesn't
No,
matter. Yeah.
That's assuming that the clowns in Washington don't do the right thing.
And you can never go broke betting that the clowns in Washington don't do the right thing, right?
Right.
And it doesn't matter that Yellen has been elevated to Fed chief, and people say, oh, she's not going to be the Fed chief until January 1st. Look, Ned, you know and I know, for all intents and purposes, she's the Fed chief now. You're not going to hear Bernanke's name mentioned much now, if at all, for the next 3 months.
Oh, that's right. He didn't go to Jackson Hole, so he's
done.
packing up his. Yeah, he's packing up at home. He and his wife are packing the boxes. He's not doing anything. And Yellen is in no way a hawk on monetary policy.
Hey.
I mean, you haven't heard one disagreement, one moment where she ever disagreed with Bernanke's policies.
Of course not. And look, if you ever heard a guy breathe a sigh of relief, now he can reduce his meds. He can cut back on his alcohol consumption. Whatever this guy has had to do to cope these past 5-6 years, and I don't envy the guy. Whatever you want to say about him, he's been in an impossible position, a no-win position, because he's really had no choice in the matter here, Ned. Let's face it.
We never talk bad of a guy after he's gone.
And
that's not polite. That's not polite.
What choice did he have? Let's face it. He had no choice.
And Yellen owes her job to Obama, and she's going to be a good soldier for Obama.
Obama and the banks. Let's face it. Who owns the government? She's not in there by accident. And they say, oh, she's so brilliant. She saw the financial crisis coming. Now, I read that speech that she made where said, oh, housing is going to have some problems and it might affect the overall economy. That was the most wishy-washy, milquetoast speech I ever saw. Contrast it with Peter Schiff saying, look, this is a bubble. Housing's going to blow up and the economy's going to blow up with it, to her milquetoast speech. And there is no comparison between the two, Ned.
No, and everybody but the Federal Reserve knew we were in a bubble. Saying she knew there was a bubble, don't make her brilliant, because everybody on the street knew it was a bubble.
Of course, because you just don't have these artificially low interest rates for protracted periods of time without there being malinvestment and fallout.
Correct.
Can't happen. And
no.
And really, so what about the effect on paper assets, bonds, the stock market? What are you seeing happen there?
The bull market of bonds is over, and it's been over for a couple months, and that's over. Now, on the stock market, at the present time, you would have to be a blind Tibetan monk in a cave not to recognize the instability developing in the Dow Jones Industrial Average. I mean, it's there, and I'm not sure totally why it's there, but we have to notice that it's there. We're due, if that pattern breaks down, it looks like a massive head and shoulders. I mean, it's so obvious that we're looking at the end of the primary bull market in stocks that the Federal Reserve created. And it will disintegrate into a couple of sectors that outperform the market. In other words, that do well, like agriculture. They'll still chase their silly social networking sites, but the broad primary bull market in U.S. equities is over. The hot market is probably going to move to the west, to Asia. Shanghai just exploded with the introduction of the new Shanghai Free Trade Zone. Anything with the name Shanghai in it doubled on the Shanghai Exchange. The new Chinese premier has opened that free trade zone, and it is the freest trade zone China has ever opened. Banks and businesses are been falling over themselves for 6 months trying to get in there. There's going to be currency trading and conversion and all kinds of good rules. So I think that the interest of investors is going to move back to Asia because the U.S. economy is going to be so lackluster. I mean, the damage that Obama is doing to this economy is going to flow through the stock market. It just can't help but do so.
Really? And if you were president, what would you do? I think we're going to talk about that up next on the financialsurvivalnetwork.com. I'm Kerry Lutz. We're talking with Ned Schmidt on 1230 WBZT.
Hi, it's Kerry Lutz. I recently decided to move my retirement account into physical precious metals to hedge against the coming times. If you want to move an existing retirement account into physical precious metals that you can hold in your hand, tax-free, there's no company that can do it more quickly and efficiently than Regal Assets. It took them just 24 hours to open my new IRA account, and all I had to do was fill out one simple form. The best part is that Regal Assets does all the work for you. They cover the setup and administrative costs for 2013. If you're interested in making the same move I did, call 855-678-6620, 855-678-6620. That's 855-678-6620, or visit them at regalassets.com. You'll be glad you did, and tell them Kerry sent you.
We're back on the financialsurvivalnetwork.com. Kerry Lutz speaking with Ned Schmidt here, 1230 WBZT. So if you're president, Ned, what do you do? How do you turn this ship of state around? Is there anything you can do?
Well, the first thing you do is you put Harry Reid send Harry Reid up to the space station. And that would be the first thing.
Or St. Elizabeth's Hospital, one or the other?
One or the other. The president whoever's president has to have the support of Congress in unwinding the trajectory of the U.S. spending, government spending. And it has to be done in a very gradual way, but a way that people can see in the numbers. We can't go cold turkey. The world doesn't want that. So it's to unwind this mess that's been created over decades. And it doesn't, we can't blame it on one party. You and I talked about that before. They're both guilty.
Yeah, they're dueling crime families, like in New York.
Yeah, the risk in all this situation is, see, we really have three groups. We've got today's Democratic Party, and we have the establishment Republicans led by the Three Stooges in the Senate. They're all interested in using government money to buy votes. The establishment Republicans have no interest in doing anything about government spending. If there is a major issue developed, I don't know what that might be because of this deficit problem, the historic response has been for a third group to be elevated to leadership. In other words, you kick out all the old toads and put in new ones.
Oh, what a nice thought that is.
That is the right wing of the Republican Party, led by Ted Cruz. Mm-hmm. Now, that's been the traditional response of the electorate when you have an economic failure due to one group running the government. They throw them out. I don't know what that means. I don't know that it's all positive, as much as I'm a conservative right wing. And when it comes to economics, I don't know that I can tell you what would happen if that came about. But it sure would make me to want to own some more gold.
Well, you know, it's interesting, Ned, because basically everything that's happened in the U.S. economy for the past 80 years, and we're looking at close to 80 years, right, since the New Deal, getting close to its 80th anniversary, it's all happened with a whimper. There really hasn't been much of a fight. The fight kind of took place in the Supreme Court early on, and it just happened. It's, you know, it reminds me of that old cartoon, don't just stand there, do something. And that's what the American public has wanted for all this time. They're doing something, but the problem is sometimes the best solution is to do nothing. Other times, the worst thing you can do is to do something. You know, non-intervention, laissez-faire really is the best way to run an economy.
And I dug it out yesterday because I was thinking about what we might talk about it. It's a book that people might want to look at to understand this political dynamic. And it's called The Crowd, A Study of the Popular Mind by Gustav, that's with a V, Lebon. Lebon, or however it's pronounced, wrote this book in 1895. And it is the Bible on political crowds. And that it's available. It's a reprint available from Amazon, and it goes through this response when the primary crowd is tossed out, and the new crowd is starting to take over. There's a clash in there that causes the system to vibrate unnaturally, and that's something we've got to look at.
So it's called. Just give us the name of that again, please.
The book is The Crowd, C-R-O-W-D, A Study of the Popular Mind. And you spell his last name L-E, capital B-O-N. And it's available Amazon. And the man's thinking about crowds in the political system was just light years ahead of anything. He's still read today. The reason it's in print is he is still read today by people trying to study mass psychology.
Interesting book. I'm going to pick up a copy. Quickly, let's review the agricultural commodities. let's start with beef and kind of work our way down to the grains.
Beef is an interesting one because we've had two things happen to the beef industry, particularly in the United States. Is we had 2 years of drought in the Southwest, and one of those years in the southern United States. And ranchers were forced to shrink their herds. Well, then they saw high grain prices in 2012, and they said, nobody's going to buy my feeder cattle anyhow, so I'm going to sell them and cut back some more. Well, now we've got a shortage of cattle in the United States, and beef is not made in a factory in Iowa.
Are you sure?
It is.
Wait, you get it in a box at the supermarket.
It's created by humping cattle. And
wait a second.
What?
That's not what they told me in school.
You went to a state-run school.
Yeah, I've been dumbed down here, Ned. I got to go. Is there a YouTube I can find more out about this? Because I've been totally under the wrong impression here. Because I thought there was an assembly line, and they kind of just pump the stuff out. And now you tell me that nature has to take its course. I'm shocked here. I am shocked.
Now the problem is, once we get a cow pregnant, it takes 9.5 months for that to produce a calf. I don't care how many Twitter messages you send, Kerry. It's not going to change that. So it takes 9.5 months to get a calf, and then we have to let the calf grow up and get to market weight. So we're talking about another 6 to 9 months. So we're looking at a beef shortage in the United States that could last well in the next year. I mean, it's going to be the fall of 2014 before there's any chance of relief. Now, it's hard to play that sector. There's one stock that people have suddenly discovered, JBS, which is a Brazilian company. It's based in Brazil, but 2/3 of the company is in the United States. They own Pilgrim's Pride and Swift, the big beef and pork company. And so that company stands to benefit significantly from the beef shortage. And it trades in the United States under the symbol JBSAY.
JB like boy, SAY?
JBSAY.
All right, let's look at the stock quote on it real quick. We'll use that miracle thing called the internet and see what we got there on marketwatch.com. Come on, computer. Let's see what we got. It's only trading at $7.41. And looks like can't really tell much about it here. Pretty good sized stock, a $10 billion market cap. It's on
it's not a small company. They got $40 billion. They got $40 billion in revenue, and it is the biggest. It is the largest animal protein company in the world.
And it's actually got a dividend yield of almost 1%. So, yeah,
Now, 2014 is going to be good for agriculture because this past year, 2013, we had a shortage of grains in the United States. Next year, we're going to have plenty of grains around, at least in the beginning of the year. So we're going to have big volumes. Companies like ADM and BG, they work off volumes. They really don't gain much from price movements because they hedge out the price movements. But volume gains are good for them. It's going to be a good year in South America. Brazil is really hot in agriculture. I mean, they've been hot, but it's getting hotter.
right.
And that helps BG. BG is big in South America.
Mm-hmm.
AGCO, the tractor company, only does about 25% of its business in the United States. The rest of it is in Latin America, Middle East, Africa. All of these areas are hot agricultural areas. So AGCO is a company that's should have a good 2014. Things that farmers can't avoid are seeds, pesticides, and drugs for their animals. So there's three companies to look at there: Monsanto, Syngenta, and Zoetis, which is a new company. Its symbol is ZTS, and it is the animal pharmaceutical business of Pfizer that was spun out this year. It's a S&P 5. It's an S&P 500 company, and it pays a dividend. That's one investor need to go know, because they are an international company, and they do farm animals, but they also do domestic pets. I'm more interested in the farm animal business, but the domestic pet business in the developing world is hot. I mean, up till the time Mao died, the Chinese didn't have pets because they didn't have enough food to.
Yeah,
they couldn't afford them. They didn't have enough food to feed them. I mean, the only numbers you really see are pet food periodically. Pet food is a growth industry in China and Asia, and they're just like all the people you and I know. When their little doggy or little kitty gets sick, they run down to the vet with a bag of money, and the vet is very happy to take it.
I've been guilty of that one myself, Ned, shaking my head saying I must be an idiot spending more money on this dog than I'd spend on myself. But you know what? You do it, right? And
right.
You know,
I mean,
you shake your head and you do it.
Even though a bullet would be cheaper.
Yeah, by a large measure, a bullet would be cheaper, but you do it. And, you know, I just, my ex just had to put to sleep our old Jack Russell. And, you know, the thing had been suffering for a year and a half. It went deaf, and definitely it should have been put to sleep a year and a half ago, but you hold on because you just hope. And it's a member of the family. You can't just do the smart thing. You have to just, you know, they say, Ned, that 90% of Medicare is spent in the last 6 months of the patient's life. 90% of the vet bills are spent probably in the dog or the cat's last 6 months as well. And it's just an act of lunacy, and yet that's the human condition. And they're going to be doing it in Asia and in China, just like you do in the United States as well, right?
Right. But we all that's not hard to conceptualize. Most of us understand that they're just like us when it comes to their dogs and kitties. And so
you got it.
So that's an interesting company to look at. Now, one that's discussed a lot, there's a lot of talk always on fertilizer. I don't like fertilizer. There's too much of it in the world. AGU, Agrium, does
I'm
a
sorry,
big fertilizer thing.
you just cracked me up. There's too much verbal fertilizer, that's for sure,
Well,
especially in
Washington.
Washington.
That's where you were going. I know that's where you were going. I was hoping you'd quit.
I'm sorry, go ahead. What was the name of that company?
Anyhow, Agrium, the symbol is
Agrium.
AGU.
Mm-hmm.
Now, they have a big retail farm service network all across North America and in Australia. So it is more than fertilizer. The retail industry takes out some of the cyclicality of fertilizer. In any event, we've been having the great potash war of 2012, which has hurt fertilizer prices. So there's some negativism on Agrium. That negativism will probably continue through January,
Right.
when they report fourth quarter.
Mm-hmm.
But they're going to have a very good spring, because this year the farm service stores are going to be doing a bumper business. Last spring, or spring 2013, was weak because farmers couldn't get into the fields early, so they didn't spend as much money. this year they're going to spend money. So Agrium is one people want to put on their computer, watch it, and around January when they report, get interesting. This is a company you want to own long term. Its management is just head and shoulders above anyone else, and it is the only company like it in the industry.
And it's yielding 3.6% dividend, and earnings per share is about $9, $9.02, which means its PE is $9, and it's got a big market cap, and it's in food. And let's face it, food shortages, they're with us. You're going to have it. So, stable company, right?
Right.
So on that note, we gotta depart. But Ned, it's always an eye opener speaking with you. Didn't have a chance to talk to you about interest rates, but obviously, if the bubble in treasuries is over, then interest rates are heading higher. I don't think anybody can deny that. Although they're gonna fight that. The Fed's gonna fight it for as long as they possibly can. I don't think there's any question about that.
Correct.
Right now, the 10-year is at 269. A year ago, it was at 180 something, and that's going to be an interesting sight to behold. So, on that note, just give us your two websites again where we subscribe.
My gold site is valueviewgoldreport.com, and agriculture is agri, A-G-R-I, food, valueview.com.
All right, Ned, it's been too long, but we'll talk with you again real soon. And financialsurvivalnetwork.com will have links to Ned's site. And Ned, thanks again. We really appreciate it.
It's always fun to talk to you.
Hey, you too, Ned. Thanks so much.
Bye.
Summer is almost over, and so far we've really lucked out. No hurricanes. And living in Florida here, I'm extremely grateful. But that could change tomorrow. And look, we're about to celebrate the 1-year anniversary of Superstorm Hurricane Sandy. Do you remember that one? Not very many people in the Mid-Atlantic or the New York area region were prepared for it. But if you had PrepareWise emergency preparedness food, you were ready. If you'd prepared with PrepareWise water and the basics, some currency, and a means of self-defense, you weren't caught off guard. And if you weren't prepared then, please learn from it and get prepared now with PrepareWise emergency preparedness food. It always pays to prepare. Go to preparewise.com, use the code Lutz. You'll get great savings. Depending on the size of your order, you're going to get a whole lot more. Be prepared. Don't be caught waiting for the government to come and save you. Preparewise.com. Use the code Lutz, L-U-T-Z. Be prepared.
The Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.